the chairman. Somebody who listens to the people. Somebody who listens to the people. Somebody who listens to the people. The chairman. Elders in the back.
Yo guys, welcome to another video. If you are new to the channel, my name is Ballo.trades and I document my journey to become a successful forex trader here on YouTube. So do me a favor by clicking that like button, clicking that subscribe button, and clicking on that notification bell to get notified when I drop another video. So yeah man, welcome to another video of me documenting my 5-figure journey with GFT, trying to get funded with GFT, right? So we are still currently in recovery mode. It's taking longer than expected, but then I understand because I'm obviously swing trading, right? With regards to swing trading, I've decided to make small changes in my trading and the way I approach the market, right? So I've been journaling my trades for the longest of time, right? And I went back to my journal just to see how I've been performing for the past 2 or 3 months, and I come across something, right? But before I tell you what I came across, is that I just want to emphasize the importance of journaling your trades, guys. Journaling your trades is very important, and this is why you get to review your past 3-4 months of data. Then you see what you can improve. But if you're not journaling your trades, obviously you cannot see what you can improve because you don't know what's wrong, right? You cannot change what you don't know about. You know what I'm saying? That's why it's really important to journal your trades. And this is one thing that I'm going to keep on repeating in my videos. Guys, journal your trades. It's really important. You don't see the benefits of it immediately, but down the line you are going to see it. Trust me. Now back to what I was saying. So I've decided to go back to my trading journal and see what I've been doing for the past 3-4 months, right? And I realized that for someone who calls himself a swing trader, I'm taking too many trades. That is just that. I'm taking too many trades, right? On average, I could average like 3-4 trades a week, which is something I don't want to do as a swing trader. You know what I'm saying? I'm at a point in my trading career where patience is really a virtue for me, right? Patience is a skill that I've managed to acquire, right? I could sit on my hands and do absolutely nothing. You know what I'm saying? So taking 3-4 trades as a swing trader is absolutely absurd for me personally and for my trading, right? So what I'm going to do now is to drastically decrease the amount of pairs that I'm looking at a time, right? So just to give you guys some context, this is the pairs that I've been looking at day in and day out, right? Which is crazy, I'm not gonna lie. So I've decided, you know what, dog, if I could take only 3 to 5 trades a month, good trades, I'm fine with that, right? I could wait 2 weeks without taking any trades, right? And while I was trading my previous strategy, which was the Falcon strategy, it really taught me a lot about patience, right? So patience is a skill that I've managed to acquire, so it's not really a problem for me. So right now, I haven't stepped on the chart actually, but we're gonna do so in a minute. So yeah guys, let's just get into it. If you don't follow me on Instagram, I'll leave the link in the description. Make sure you do so. I post reels on a day-to-day basis. So yeah man, let's get it. Okay guys, so this is my finalized watch list. This is what I'll be looking at on a daily basis instead of whatever that was that I showed you, right? So this is the DXY, right? I don't trade the DXY, I just use it as a confluence. For those of you guys who don't know, when DXY is rising, Euro USD and GBP USD is falling. For example, let me just show you guys an example. As you can see, this is DXY, right? And right now it was pushing towards the upside and now it's retracing. Now Euro USD is going to be the complete opposite. We were dropping and now we are rising again. Same thing with GBP USD. We were dropping and now we are rising. So I'm using DXY as a confluence to these 2 pairs, right? Now we have the first one we have is Euro USD, GBP USD, USD JPY, AUD USD, USD Chef, right? These are the major currency pairs for those of you guys who don't know. Then the indices that I'm going to trade is US 30, Nasdaq, and German 30, right? Then the metals slash commodities that I'm going to be focusing on is gold and silver, and these 2 as well move similarly. To be honest with you guys, they move in a similar manner. So it's basically like trading Euro USD and GBP USD, right? So but yeah, that is my watch list. This is how it looks like. For now I won't be making any other changes. I'll just be updating my trading plan, and I'll also be doing some changes to my risk management, where when I approach profirms, I'll be risking 2% since now I have this small watch list, right? So yeah, man, that's what's going on right now. Okay, so I've just been backtesting USDT, right, as part of the indices that I've decided to trade. Now, I've been backtesting USDT for this entire year, and I know some might say that a year worth of that is not enough to base off my thesis of. But here's the thing. First of all, this pair does one of two things when I trade it, right, just based off my backtesting. The first thing is that it doesn't retrace deep enough to tag me in. I use my Fibonacci, I use the 0.71 level on my Fibonacci tool, and usually it goes to around 61%, 50%. Usually it's like between 61 and 50%, right, which is not deep enough to tag me in. Now that will force me to adjust my Fibonacci tool to accommodate USDT. Now if I adjust my Fibonacci tool, it will eventually also mess up with my risk to reward ratio. I will no longer have as a 2.45 risk to reward ratio. It will drop to, I think, 1:2, right, which is something I'm not willing to do. And another thing is that I think I've been trading currency pairs for such a long time to not understand how USDT moves, because one thing that I've realized with USDT, the price action is different from currency pairs, which of course is obvious, but then I didn't think it was this bad, because the price action here is just something else, to be honest, right? And I think I'm going to come to the conclusion that USDT really wants me to not trade it with my strategy, because it doesn't work well. Even my backtesting results just by this year doesn't show profitability with my strategy. So what is the plan now? I think the plan now is to just exclude USDT, but I'm going to go back, also test other years, just to confirm my thesis, and probably replace it with another currency pair. Because if USDT moves like this, which means S&P 500 and also Nasdaq moves like this, because if you guys know, USDT, Nasdaq and S&P 500 usually moves in the same direction at the same time, right? But yeah, that's one thing to consider. So I have a list here, right, of all the currency pairs that's available, right? So what I'm going to do is backtest all of these pairs with a 3-year period to see what's the most performing currency pairs and what's the worst performing currency pairs, right? This is obviously going to take a long time, but I don't really mind. I'm not in a hurry, and I think I'm going to replace indices and commodities with other currency pairs, but that's something that's at the back of my mind, right? It's not yet official, right? But yeah, man, we'll see, because right now I'm busy backtesting. And oh, by the way, as you can see, I was just busy backtesting, but let me just show you guys the pairs that I'm looking at for now. Right now, as we speak, I'm looking at Euro USD, just for a simple sell. I've put my sell limit over there, so the pair has a pending order. Then another one is USD SHIF, right? As you can see, we have this range, then we have this imbalance right here, which is in the general vicinity of my fib level, right? Now, as I was saying, this is where my fib level is, right? The 0.71. And usually USDT usually comes at the 50% mark, then just goes further up, right? So this will require me to keep on adjusting my fib level, which will mess up with my risk to reward ratio, because if now I pull my risk to reward ratio upside, as you can see now, to like the 0.61, it's not even, let me just do like this. As you can see, the risk to reward is messed up. Right now it's normal, a 1:2, it's a 1:258, which for me isn't something favorable, right? So what I'm going to do right now is to just, I think, remove, because this is what I have, like I showed you in the morning. I have these 5 non-currency pairs instruments, right? USDT, US 100, German 30, gold and silver, right? Now I think also gold moves not in a similar manner, but I think also gold just doesn't retrace deep enough to tag me in. But I'm still gonna backtest it just to confirm what I'm saying. But yeah, man, right now it's just refining and refining and refining, right? So yeah, man, it's part of the work, it's part of the journey. We have to find what works for us. If there's one thing I've realized with trading, is that this is not a one size fits all type of thing, right? You have to find out what works for you and refine it until it works perfectly for you, right? So yeah, man, let me just continue doing what I do, and I'll share with you guys once there's any improvement in price action. So I just want to share something with you guys. I actually shared this video on my Instagram, so if you don't follow me, guys, make sure you do so. I just want to explain to you guys that there's a big difference between someone who makes profit and someone who is consistently profitable. Let me just show you guys how. Take this guy, take his annually performance, right? He's consistently profitable. January he made 3%, February he made 1.45%, March he lost 0.5%, April gained 6.6%, May lost 2%, June gained 2.45%, July didn't make anything, August lost 1.5%, September gained 4%, October lost 3%, November gained 2.2%, and December he made 1%. It's really important to understand that every month you are not going to make money. That's one thing to acknowledge and to make peace with. Some quarters are different, some months are different. You have high performing months and low performing months, and that's completely normal. It's part of trading, right? In totality, this is a wholesome 13.15%. Now, just to give you guys some context, some hedge funds make anything from 10 to 20% annually. Now, making 13% as a retail trader is actually quite good. Now, let me show you guys an example. Say you have a 200k account, right? Say you have a 200k account and you make 13% on that 200k account. This is $26,300, right? In rands, that is obviously close to $500,000. Now, obviously, as a trader, you want to keep on scaling your capital to have more capital. That's why it looks like trading actually works for people who have high capital, because it makes sense in a grand scheme of things. You don't have to chase for high return. Now, say you have two accounts, which is 400k. Now you make the same 13% on a 400k account. Now that jumps up to 52,600. Now imagine if you were funded with 600k. The numbers keeps adding. Now imagine if you are funded with now $1 million. Now the figures are now going beyond your understanding. Now I just wanted to share with you guys. You can make this what you wish. This is just some food for thought.
We don't put people on the chair and say it's a leader or president. A true leader listens to people and takes decisions. So when they get to a point of no return, it doesn't help to kill them, shoot them. No, it doesn't help. Just push them to the side, cause
you know, at this point I could keep showing you guys the whole day. This is yet another scenario of price not retracing deep enough. I think this was 0.60 retracement or so. I'm just sitting here waiting for price to tap me in, but as you can see, it left without us. So yeah, man, I'm starting to conclude that USDT shouldn't be part of my watch list. But let me just finish off this here. But I think I've made my decision of USDT. And this, ladies and gentlemen, is another scenario where price didn't retrace deep enough to take me in. Like I said, it usually retraces from anything from 61 to 50, right? As you can see, this faint gray line, this is the 50% mark, right? And imagine if I take my trade from here. That is a 1-to-1. That is a 1-to-1, as you can see, right? And this is a 2.45, as you can see. So yeah, it's crazy, man. Just to give you guys some context, right? This is the first TP that I've took so far ever since backtesting this since January 2025, and now it's July 2025, right? So I don't think this strategy works well on this particular strategy. As you can see, this balance started off with 100k, and as you can see right now, we were in drawdown just before we took this trade. Just before we took this trade, we were like 4% down. Right now we are like 2.something% down, as you can see, right? And it's July. It's July. That's the crazy thing.
You say you're the chairman. Do you know what it takes to be the chairman? The leader of the people, the chairman. You can't just say you're the chairman.
Yo guys, welcome to another day, welcome to another new morning. So yeah man, we're gonna get busy. I'm not gonna lie, it's gonna be a period where I have to really lock in, you know what I'm saying? Because like I mentioned in the previous clip, that I'm gonna have to backtest over 20 pairs to see which ones best perform with my strategy. You know, I mean, my strategy works, but it's just that best performs, you know, because obviously not every pair reacts the same to any given strategy, you know. So I have to really nail it down to what works best and just to focus on that, right? So the reason why I'm saying it's gonna be a period where I have to really lock in is because I have to backtest all of these pairs, right, with a 3-year period. So each pair I'm gonna have to backtest 3 years of it, right? It's not gonna be easy, that's definitely for sure, but we're gonna get to it, man, you know what I'm saying? But yeah man, right now we're gonna start with GBP AUD. As you can see, I think I'm even thinking of cutting it down just to make it 2 years, because I think 2 years is quite enough data, you know what I'm saying? But then I'll look into it, you know what I'm saying? So yeah man, right now I'm just gonna backtest, and I'm thinking of ending the video here because this is longer than it needs to be, you know what I'm saying? Hope you guys like this video, hope you guys like the transparency. Tune into the next video of me documenting my journey and showing you guys what's happening inside closed doors, you know what I'm saying? So yeah man, like, subscribe, comment down below, share this video, and do whatever you like. Let's get it.